So John, negative gearing's been in the media a lot. So what is negative gearing?
Well, it's interesting, Shane, because when the words negative gearing are used, everybody presumes it's something special to do with property, which it isn't. Fundamentally, negative gearing is where we relate the income from an investment property, from a rental property, to the costs of owning and running, which would include interests and rates and maintenance and vacancy factors and everything else, to the costs of owning and running a property, to the degree that the costs are in excess of the income. So there's a loss. Now, the present taxation laws mean that that loss is deductible against other income we have in the particular year that we had that loss. Now, the interesting thing, I think, that I was alluding to at the start, is that whenever the words negative gearing are used, in particular by John Fain on the ABC, but many other journalists, who have this rant about negative gearing on the basis that everybody that negatively gears property are these greedy tax dodgers, these ugly, wealthy people that are just trying to skim money from the community, which is so wrong. It is just so wrong. The fact is, negative gearing is a foundation stone, a fundamental foundation stone of our Taxation Act, to the degree that BHP, if they're creating a mine that will create an income into the future, they are able to deduct not capital expenses but income expenses in the particular year that they've got those expenses, but as long as they are aiming to create an income into the future. So whether it's that or whether somebody's setting up a hotel and they've got expenses this year while they're waiting to create income from the hotel, or a panel beating shop, whatever it is, negative gearing is a fundamental foundation stone of the Taxation Act. And the crux of the commentary that I find, in a sense, detestful is the fact that people make out that it's wrong. It's not wrong as long as the property investor is genuinely wishing to create an income into the future. Now, because of the nature of that asset class, that's property, it must be a long-term aim, 10 years, 20 years. But that's a good aim, and it's a healthy thing that people take that responsibility to create their own pension, their own superannuation that doesn't rely upon the government regulations with regard to superannuation and so on. It's a healthy thing. They shouldn't be looked at as criminals.
We only have a handful of clients in our client base that earn over $500,000 a year, which would be the type of people that we're talking about. The majority of our clients earn less than that and use negative gearing as an investment strategy, which I'm sure Shane can elaborate on, being the one that actually recommends property or investment to clients.
Look, as an asset class, I definitely believe in the property story, but then also likely the shares and then the market also for the long-term side of things. But yeah, I think the demographics that we're seeing coming through the door now is changing. We're seeing younger clients still out there renting or living at home, earning good money, anywhere between that $50,000 to $100,000, with their parents' support and knowledge. I think it's excellent, coming into the business now and looking at generating wealth through borrowing money, because they have the options to do so now without all the expenses of family life, kids, and things like that. So, why penalise people for trying to get ahead in life, especially early, and they're not well off like the media and the papers and the governments, pertaining the strategies available for. I mean, we've got a varying number of people coming through the doors.
The point I can make that disappoints me a lot that you can't make, respectfully, is that I can go back 45 years and it was the same then. It was this thought that anybody that negatively geared property was this wealthy tax cheat. And we, all of us here, can absolutely, hand on our hearts, say, with regard to the people we know and we are in contact with that are clients of our group, and I can say it for 45 years, I can say that 97% of them, if not 99% of them, aren't the wealthy. They're just ordinary Australians. And that's, do you feel confident to say that?
I do.
Rachel,
Yeah,
Shane?
absolutely.
Same thing.
Yep.
So one thing, we're not talking about the wealthy, we're talking about ordinary Australians that are looking at investing to become financially independent and doing it with themselves and in their own right. What are their options? Cash, for flexibility and reserve purposes, equities and property for growth, and the mechanism of gearing, the foundation stone of deducting losses to get the benefit of gearing to help them increase the return on equity, increase the return on capital invested is absolutely reasonable for both equities and property. The construction industry will be substantially detrimentally impacted, so it's a huge impact on the economy if they impact this ability for people to negatively gear, and stopping individuals looking after themselves in regard to their future, I think, is a disgrace. I think they're the individuals in our community we ought to be ticking and supporting.
Mm-hmm.
Absolutely.
I was reading this morning in the paper that they were also talking about reducing the capital gains tax discount from 50% to 40% to 25%, which obviously means that you pay more capital gains tax. So let's run with the assumption that negative gearing is going to be stopped, and people continue to buy these properties. There's no negative gearing, or the losses that are generated from these properties can be quarantined and offset against future capital gains. So that means, yes, we're going to pay more capital gains tax, but we're actually going to be able to use the losses that build up every year to offset that capital gain 10, 15 years in the future when we sell the property. And by all accounts, that seems like it's a good thing. That it seems to me like they're saying, well, you've got these losses, we're not going to lose them, we can use them in the future. The problem that I have with this is so many of my clients come to me once they've bought an investment property and say, Rachel, I need to fill out a pay-as-you-go withholding variation because I need the monthly cash flow that variation would allow me to get to help me fund this property. And that to me says that these people wouldn't be able to afford to fund the property for 10 or 15 years to get the benefit of the losses to offset against the capital gain, so it's still out of their control. For those that don't know, our pay-as-you-go withholding variation is where you actually know that your property or investment is going to be negatively geared. It's going to reduce your employment income. So you write to the ATO, you let them know that you've got this loss that you expect to get, and the ATO write to your employer, and your employer doesn't deduct as much tax out of your salary, so you have more take-home money each month that you can use to fund this investment along the way. So it seems to me that this CGT concession and quarantining it actually doesn't help.
So when we go back and we look at what happens over decades, and the first house I bought in Surrey Hills when I was 21 for $21,000 on 75 foot by 160 foot beautiful Victorian timber house with beautiful magnolia trees and so on. Not that you needed to know that, it was just going back and down memory lane. And 21,000, let's pretend I borrowed all the money plus costs to buy it, and I borrowed it interest only and I didn't pay anything off. So 40 years later, what is a $21,000 mortgage? It's nothing. So my long-winded point is that, following through from what you're saying, getting all those benefits of compounding and gearing and helping people do it today helps them really improve their circumstances in 10 years and 20 and 30 and 40 years. So the capital gain thing doesn't really compensate them because it stops them. It stops them from being able to do it. Now, if somebody said to me, John, let's say people who negatively gear pay more capital gains, I'd say I'm not certain if I think it's fair. But if they're genuinely looking for an income, what I'd be saying to them is never sell the property, keep it in retirement, live off the rent, then everybody's happy because you've been a genuine investor for the long term to create income, which is exactly what we're doing with superannuation, which is exactly what's allowable if we negatively gear equities.
I think I'm a little bit confused about that point there, because buying it for the income would imply that you would pay down the debt and therefore the property wouldn't be negatively geared.
Well, you don't necessarily have to pay down the debt, because going back to my example of the house in Guildford Road, Surrey Hills,
yes.
There is clients, Michael loves taking people to a particular block of apartments in Albert Park, where our clients purchased them in about 1982 for 19 to 21,000, and now the annual rent from these properties is greater than the capital value they paid. So you don't have to pay down debt. Now I think equity build-up, which happens because of two things, paying down debt or capital growth, I think when we have times, like Sydney had a time where capital value hardly moved for 12 years, definitely 10 years, and nearly I'd say 15 in some categories of property, there's a very good reason for people to pay down debt. I think it's a nice, safe way to invest if people have surplus cash flow. Even though I know what they're doing is paying down tax deductible debt, I still think there's nothing nicer than building up equity over time if you can do that. But you don't have to do that because, assuming decades and hundreds of years fundamentally with population growth and economic growth, not just in our country but worldwide, fundamentally we have a devaluation in the value of borrowed money, and over time that means you will be in surplus cash flow and therefore will have an income. This morning on the radio I heard a commentator saying the Property Council of Australia can't be objective. Well, the problem with that is what you're doing is you're cutting out anybody that knows. Now, I have sat looking in the eyes of individual property investors for 45 years. I have been involved in the property industry to do with investment and individuals for 45 years. That's billions of dollars worth of property. I've been on 3 government inquiries into property investment. And I'm not ranting about myself, but what I am saying is I'm a humanist. I believe in what's best for the community. I reckon I can be objective. I don't believe I'm subjective and biased in this commentary. I am very annoyed that individuals that take the responsibility by buying property and, in today's circumstances, negatively gearing it, which is a reasonable thing to do with regard to our Taxation Act, to achieve income, to save our country for paying for them into the future, to make out that they're bad people, to me is just wrong. We should be encouraging them, not taking away the advantages.
If accountability.
Well, I think Shane needs to be careful, mate. Nothing's happened.
No,
and
I know.
Frankly,
So,
you don't seem as comfortable with it as me. I think by the time the community has a conversation about it, sure, they might change things a bit. They might do a little bit the way, with regard to what was that, Rachel? You brought up that conversation, which is so correct about hobby farms and what's the term?
The non-commercial.
Yeah, non-commercial aspect, and I think, maybe they will take our. Maybe they will be a bit harsher with regard to the category of property, which I think they should, because there's no way buying a $5 million house in Double Bay is going to likely produce an income in the same way that you could look at, a $1.5 million terrace in Paddington, or a $1.25 million apartment in Kirribilli or Elizabeth Bay or
Sorrento.
Yeah, well,
the holiday house.
Yeah, the holiday house. That's right. So exactly. Or the farm. So I'd be happy to support that. I know a lot of people, would be frustrated with me saying that, but let's be genuine about this. So we end up with a good law. With good law that is supporting people who are genuinely investing for income for the future, for when they stop work, and to make themselves financially secure. And I think it behoves us, not to just, carte blanche say, oh, terrible. I think, qualifying it. As we did in the 80s with Keating. We said to Keating, if somebody's claiming the losses and sells in 2 years for a big gain, that's wrong. That is against the purpose of the deductibility. So we concur, we agree. Stop them from doing it. Although I think this category of property. Do you agree with me on that, mate?
I think so.
Yeah.
I think definitely what I want to see out of this is the government come back to the industry, like both the property, the accounting, the financial planning industry, whether they go to the bodies and get some feedback from the participants, because we're the ones that are really affected and then ultimately our clients. And I think, if they start to engage us a little bit, hopefully we can also provide feedback on our views of where maybe it could be developed moving forward or improved.
I think that's a good point you make, Shane, and the only issue that I concur with you, the issue that's so relevant, that is absolutely a disgrace, is that what is politically expedient and politically popular is very often what the judgment is about. I cannot believe, for the life of me, that the Labor Party has taken competent, balanced, broad advice with regard to this issue, because you do not have to be a Rhodes Scholar or Neville Norman, who is the professor or was the professor of economics for Melbourne University, to know that the changes that they've talked about bringing in will impact detrimentally to a huge degree property markets, both sale markets and rental markets, and I can't believe they've had competent advice. It's just ridiculous. Now somebody might say, John, you're biased. Well, I've got as much right as anybody. I believe in our community doing well as much as anybody in the community does. I am not sitting here to make us more wealthy or our clients more wealthy. It is a ridiculous circumstance that they're suggesting.
I don't actually think you are biased, because in all honesty, if the Labor changes come through, that actually suits our business and our business model. If we were biased, we would be lobbying for Labor policies.